lost 3.88% in value to the US dollar last week on the spot market, increasing its year-to-date depreciation to 21.20%. This follows the strengthening of the US dollar and renewed local corporate foreign exchange demand. Here's more.
The local unit started this week unchanged, selling at 15 cedis 70 pesos at the forex bureaus. The U.S. Federal Reserve signaled just a single policy rate cut this year, contrary to market expectations of 2 cuts. This grip on monetary policy sent the American Greenback Index soaring about 100 basis points week on week, leaving the Cedi railing against the major trading currencies. The local currency also shared 2.4% against the British pound and 2.8% to the euro last week. However, the government of Ghana and its official creditors had agreed on a debt rework. This will pave way for Ghana to receive a disbursement of $360 million, contingent on approval by the IMF board at the meeting scheduled for June 28. But analysts believe this will support foreign exchange buffers, improve FX liquidity, and help stabilize the weakening cedi in the near term. Meanwhile, this week, the local unit is expected to trade sideways due to the strengthening dollar and the prevailing foreign exchange demand.
All right, so let's have a broader conversation on the back of this. Joining us via Zoom to do that is Kweku Akokumson. He is an economic and fixed income analyst to help us understand all of these. Thanks so much, Kweku, for agreeing to speak to us on Business Live. Now, with the cedi's year-to-date depreciation to 21.2%, is that to suggest that we are in for a long haul if we truly want to see some impressive performance of the cedi against major trading currencies, particularly the dollar?
Okay, good evening, Pius, and good evening to all your listeners. Looking at the cedi's performance, right, like you rightly mentioned, it's trading currently at the year-to-date depreciation of around 21-22%. That about. And you'd realize that most of these factors are really stemming from just the balance of play of liquidity on the market or demand and supply forces on the market, with liquidity being very, very, very scarce on the market. So I think that has been the issue, and it's not fine. There are some speculative bits there, but you see more of it from some fundamental issues, right? I think when the governor spoke in the monetary policy briefing, he mentioned that the narrowed current account surplus has a major factor to play here, or a major role to play here in the depreciation that we are witnessing, given that liquidity is quite scarce on the market, and that was mainly from the narrow trade accounts. So for the long haul, I mean, there are some pressures that the cedi we believe will still face moving forward, right?
As we work towards that, but of what impact will the disbursement of the $360 million we are expecting from the IMF have on our foreign exchange buffers, FX liquidity, and of course help stabilize the weakening cedi in the near term? Okay.
So on the disbursements, what happens is that it will be FX supportive, true, and additionally it could also catalyze other financing sources or funded from multilateral partners, right, such as the World Bank or the African Development Bank. I think we saw around 250 million from the World Bank, and also about 103 million from the African Development Bank. Possibly the 360 million from the IMF would also improve liquidity on the market and also bolster the FX buffers. However, I mean, bolstering the buffers is one side of the story, but then it actually translating more into, say, liquidity being that much ample on the market is also another side of the story that would have to play out mainly from the central bank side.
All things being equal, Kweku, what's the projection like for the cedi as the dollar is being strengthened by, of course, US and the prevailing foreign exchange demand?
Okay, so like you mentioned, the dollar demand that we are seeing now is because the recent Federal Reserve policy action was to maintain the policy rate, right? And the Fed funds rate. And what we are seeing is that some forecasts from the Fed policymakers are that most likely there will be just a single rate cut, and that will be very later this year. And with that, you would see that for us, as an example, I think our forecast of about 13.7 then just goes out of the window because right now the Cedi is around maybe 15.5
yeah.
mid-rate. Exactly. And hence, with that, you'd see that it's more the more downside figure really is something closer to maybe the current levels or maybe a bit worse. However, as I mentioned, we look forward to how the central bank would stay to their commitment, as the governor mentioned, that they have the funds available to step in or intervene in the market if necessary. And as such, any speculative attacks or speculative activities, we should try as much as possible to look the other way, because when there's a correction, like you mentioned, the Cedi could gain some strength given that they stand ready to intervene in the market. But our initial forecast of 13.7, at least I can assure you that that's out of the window for now.
And I'm wondering how sustainable that will be in terms of the Bank of Ghana's move to help, sustain the trajectory. Okay,
so like you are mentioning, on issues of sustainability, you realize that demand would always be there year in, year out. And as such, to address some of these issues in a more sustainable manner, it then goes to deal with measures of fundamentals, right? We saw how our cocoa earnings narrowing by that much has also narrowed liquidity on the market. So what are the things we are putting in place then to ensure that as much as possible we have some amounts of liquidity in the market so that the central bank does not need to step in? Is it value chain advancements and the likes? These are some of the conversations maybe policymakers would look to have, right? So as year in, year out, we build a relatively stable and sustainable background or backdrop for our currency to operate within the economy.
Kweku Akokumson, economic and fixed income analyst, we are indeed grateful for speaking to us on Business Life. Let's shift away from the currency to some other stories. A Deputy Minister of Local Government, Decentralization and Rural Development, Vincent Asifua, has attributed the recent marginal reduction in Ghana's multidimensional poverty rate to government policy intervention. Mr. Asifua, however, believes there is more work to be done to totally eliminate the menace. He was speaking at the launch of the National Multidimensional Poverty Report here in Accra. Here's more.
Ghana Multidimensional Poverty Report reveals that 7.3 million individuals are classified as multidimensionally poor. Of these, 43.8% face severe poverty, experiencing deprivations in multiple dimensions simultaneously. However, Deputy Minister for Local Government, Decentralization and Rural Development, Vincent Asifua, notes that this figure is lower than in 2020.
Our multidimensional poverty was 45.6%. I'm happy to note that as a result of pragmatic policies and interventions, the 2021 population and housing census data indicates that our multidimensional poverty is hovering around 24.3%. This clearly demonstrates that the interventions rolled out are making an impact and the incidence of poverty is also reducing. The current report reveals that households are experiencing food insecurity and highly likely to be trapped in poverty. Addressing poverty through income support and livelihood development therefore becomes paramount in improving food access and reducing food insecurity.
Director of Social Statistics at the Statistical Service, Umar Saidu, identifies the primary cause of poverty as related to the socio-economic status of the household head.
But in many cases, not in all cases, they are the key breadwinners. And we see from the results that when the head of household has not had any education at all, the chances that that household would be multidimensionally poor is 4 out of 10. So 4 out of 10 households where the head of household has no education, then that household is likely to be multidimensionally poor. The same way, about 47% of household heads who are not working, that household is multidimensionally poor. And we also see in the sector of employment, when the household head is in any category of agricultural employment, then they are worse off compared to those in the industry or services sector.
Mr. Cedi also highlighted a rise in poverty rate in the Savannah and Ashanti regions.
You go to Savannah region, it's 59% of the population in Savannah region who are multidimensionally poor. But in terms of the actual number of people involved, it's less than that of Ashanti region. That is why in the case of Ashanti region, you see that there are more people who are multidimensionally poor, but in terms of the proportion of the population who are multidimensionally poor, Savannah is leading. In fact, Ashanti region had the district that has the least percentage of people who are multidimensionally poor, and that is Asukwa.
Additionally, the report shows that poverty incidence is higher among female at 27% compared to 23% in male-headed households. Winston Taki reporting for Joy Business.
This is still Business Life. We are back with the Joy Business Van right after this break. Continue with the rest of our stories. The cocoa subsector has contracted for the 4th consecutive quarter with a sharp decline of 20.2% in Q1 of this year. That's according to latest data from the Ghana Statistical Service. This represents the most severe drop in over a decade. Winston Taki brings us some details in the following reports.
Ghana's cocoa industry faces significant challenges, with the 2023-2024 cocoa harvest expected to plummet to between 422,500 and 425,000 metric tons, marking a 22-year low. The first quarter 2024 data showed a further decline.
Cocoa subsector between 2017 and 2022 never saw a contraction, but in the last 6 quarters, we've seen the cocoa subsector contracting 4 out of the 6 quarters. So we really need to go to the drawing board to ask ourselves, what did we do between 2017 and 2022 Q3 that the country never saw a contraction in the cocoa subsector, but in the last 6 quarters, that is between the second quarter of 2022 up until now, we have continuously seen 4 of the 6 subsectors with the cocoa subsector contracting 4 times.
Professor Samuel Inim says this was alarming.
From the perspective of Ghana Statistical Service, this is not coming as a surprise, because when we did the trade statistics a couple of weeks ago, it did show up that from a trade perspective, we've seen a decline for our cocoa subsector from a trade perspective. And this is being confirmed with the 20.2% contraction that we've seen in the first quarter of 2024. Indeed, this contraction of 20.2% is the worst contraction that we've seen in more than a decade as a country.
Despite these setbacks, Ghana's overall economy grew by 4.7% in the first quarter of 2024 compared to the same period last year, demonstrating resilience in other sectors. Winston Taki for Joy Business.
And that's our part company here on Business Life. With me, Pius Kojo Baka. For more stories, feel free, do log on to myjoyonline.com/business. More stories there. Government must raise more revenue domestically without necessarily increasing taxes. That's according to Professor Quote. Also on that portal, Cedi troubles continue. Depreciates 21% to dollar as $1 goes for 15 cedis 70 pesos. And we're heavy on that here on Business Life. More stories, do visit there and get yourselves updated. Thanks so much for your time. Do enjoy the rest of our programs. Bye.